The presidential election is just around the corner. This time, it's Donald Trump facing off against Kamala Harris. One of them narrowly escaped 2 assassination attempts. Some might say it was an inch away from sparking a civil war, while the other is leading the polls as of now. The US is bubbling with political tension, reaching levels we haven't seen in recent history. And you know what? The stakes couldn't be higher. But why should this matter to someone like me, a German trader living in Dubai? Well, let's keep it simple. I'm in the business of making money. And every time I hear the words presidential election, it's like hearing an ATM machine. This isn't a recent phenomenon. For over 2,000 years, whenever a new leader takes the reins, there's been a need to bribe the people. It's an age-old tradition. Keep the masses happy and your position of power is solidified. Now let me ask you, have you ever made a profit during an election season? Maybe if you were lucky enough to be around in ancient Rome, you could have snuck away with a few loaves of bread or a ticket to the Flavian Amphitheater. Back then, the entire city would experience an economic boom whenever a new leader came into power. New arenas, markets, roads, and public baths would pop up everywhere. Fast forward 2,000 years, and while the entire world has changed, this understanding between leaders and people remains the same. It's 2024, and I'm not going to pretend I can unpack all the intricate effects of an election on the economy. For that, we would need an economist. But I can talk about something I know well, the presidential election cycle by Yale Hirsch. I've mentioned him before in one of my favorite videos here on the channel. Hirsch is hands down one of my favorite authors in trading. And he's the brains behind the theory of the presidential election cycle. Hirsch's reasoning behind this theory is fairly simple to understand. After the president gets elected, their focus is usually geared toward their principles and proposed policies that help them get voted into office. But once they begin to gear up for re-election, the president's focus typically shifts toward improving economic conditions to increase their chances of being re-elected. In turn, stock market performance tends to improve during the second half of a presidential term. So what Hirsch is really saying is this: it doesn't matter whether the winner is a Republican or a Democrat. It could be Trump, Harris, or even Biden for all I care. When it comes to choosing up the economy, all presidents follow the same predictable pattern. And it usually happens in the last 2 years of their term, which is why the stock market tends to rise during those years. Bold theory, right? But guess what? The data backs it up. If we look at seasonality data going all the way back to 1900, we can see that the stock market follows a pattern every presidential cycle. One term equals one cycle, and one cycle equals 4 years. Here's the breakdown. Year 1 is the post-election year. Year 2, midterm. Year 3, pre-election year. Year 4, election year, with elections always taking place in November. Hirsch zeroed in on the second half of each term. Why? Because when you examine the average percentage gains and the probability of positive years for each cycle, it all makes sense. Take the S&P 500 for example. Let's start with year 1, the post-election year. It's the weakest in terms of bullish performance, with only a 5% average increase. Out of the 27 post-election years, only 13 were bullish. That's less than half. So it's somewhat bullish, but there's a hidden opportunity in the upcoming post-election year of 2025, which I'll dive into later in this video. Year 2, the midterm year, is even worse. It's the only bearish year out of the 4. In scenarios like this, the market chops around with prices ranging but no clear trend. Whenever we are in one of those years, I avoid trading based on the presidential election cycle. Fortunately, we don't need to worry about that until 2026, the next midterm year. Let's shift our focus to the green years now. 2023 was a pre-election year, and it's usually the one with the biggest gains and the highest probability of a bull market, averaging at 13% performance. In 21 out of 26 pre-election years, we've seen a bullish market. If we look at the most recent pre-election year 2023, it was bullish, with a 25% gain from the lowest point. And if we go back to the previous cycle's pre-election year 2019, look what happened here. We see a 32% increase, not too shabby. Now, what about the election year 2024? The average gains are around 9%, making it the second best year in the cycle. Out of 26 election years, 18 were bullish. Again, not bad. If we take a look at the S&P 500 chart, the trend really is spot on, with a 21% increase so far this year. Take 2020 for instance, a year that exploded with a 70% rise from the seasonal low and a 15% year-end gain. Despite COVID and the economic collapse, the election cycle held strong by year-end. In 2016, same story. We saw a 25% jump from the seasonal low and a 9% year-end increase. We can go back 100 years and I guarantee 7 out of 10 times the election year will be bullish. Now, when we add the election dates to the chart, we unlock a whole new level of prediction. During election years, the end of the year rally becomes even more powerful. The last two cycles saw a 9% increase from November to December. That's 9% in 2020 and another 9% in 2016. Those are incredible gains for just 2 months of holding your positions. And if you think these were isolated incidents, let me bring out the big guns. When we look at our 100-year presidential election data, we can see an almost identical picture compared to the 2024 chart. I say almost because 2024 was a little bit on steroids, let me explain. On the right, we have the S&P 500 chart. It could be Dow or Nasdaq, they are all correlated. Both charts show a new higher high in April, followed by a seasonal low in May, and then a massive surge upward. This move typically peaks around September, but in 2024, it was so strong that it topped out by mid-July instead. As a result, the next low came in August instead of November, and from there, another explosive move followed. So after the elections, I'm expecting another surge upward and a breakout from this area. 2020 played out as a textbook example of seasonality. We saw the seasonal low in April and the seasonal top in September, followed by a predictable low in early November, right around the election date. And from there, the end of year rally takes it to the moon. 2020 was one of the best election scenarios I've traded in my entire journey of trading. No stress, just profit. And the reason is just like I said at the start of the video. This is supposed to be a bribe to the financial markets, so it should be fairly simple to understand and profit off. You know what? Strike that. Bribe sounds illegal. No, this is more like a presidential market quid pro quo. 2016 followed a similar pattern. So if you're a stock investor, buy in November, sell in December. If you're a swing trader, take a 2-month long position. Even if you're a scalper, you could make a ton of money during an election cycle. Actually, no, you can't. Scalping won't work here because the margin of error spans weeks, not minutes. So when it comes to trading the presidential election cycle, please, no scalping, no intraday, no day trading. Just open up your chart on the daily and weekly time frames, get your old supply and demand nodes, and you're good to go. This is strictly for swing traders and long-term investors, although I wouldn't exactly call loading up on stocks for an end-of-year rally long-term investing, but it's definitely 99.9% less risky than putting your money in the next meme coin. And if you combine what we know about the election year with another famous cycle, the decennial pattern, which also features Yale Hirsch's work, there's more good news. The 4th year of each decade, which is 2024 for us, has been positive 8 out of 13 times, with an average increase of 88% from the seasonal low. In fact, we could even say 9 out of 14 times positive, as 2024 will turn out to be the same. Now, check this out. 2025 is going to be an absurd post-election year. I've talked about this before. It's what we call a phenomenal 5, one of the rarest and most elegant creatures in the trading world. Even I've only seen it once. 13 out of 14 times it turned out to be a bullish year with 300% of gains. Next year is going to be one of the best opportunities to double down on your trading career. Mark your calendars, it could be life-changing. I will tell you all about my detailed trading plan in 2025 soon. As always, happy and safe trading.